Hello, everyone. Scott Schwartz, nevertoomuchmoney.com. Thank you very much for joining me, whether it's live or later. Either way, thank you so much. Now, I have reverse engineered the way banks and the wealthy make money so my clients can take back control, do what banks do rather than what they tell us to do, and become their own virtual banker. Bottom line, I help my clients recover most of their taxes and stack investments on top of a solid foundation that grows safe, liquid, and tax-free, guaranteed. Now, this week I've been talking about business structuring. I wanted to show you a case study, real life, so that you could see what the bottom line results of this are. And maybe if you've missed one of these live streams since Monday, it might inspire you to learn a little more about this and how I can help you with this. Now let me share screen here. I've got just one slide to show you, and this is the case study of Toni Densing. Now, as you see here, she inherited a business in the San Francisco Bay Area and ran it as a sole proprietor for 10 years, paying around $10,000 a year in taxes. 10,000 times 10, that's $100,000, six figures out of her pocket that is never going to come back. Now she upgraded to an S Corp, and instead of paying $10,000, she got $1,000 back. Then later, she structured her business. Her next return was $20,000. So let's think about this now. I've never lived in the San Francisco Bay Area, but I know it is expensive. Silicon Valley right there, very high prices. If she was in, say, either the 20 to 25% tax bracket as a sole proprietor, that means she was probably making neighborhood of $40,000 to $50,000. Now, no doubt she had some business deductions that she was making. My point is, she was not dripping with money. Okay, this is not someone who was high level productivity in her business in an expensive area. Then she upgrades to an S Corp. Instead of paying $10,000, she gets $1,000 back, an $11,000 difference. Do you think that Toni was excited about this $11,000? Absolutely, she was. It made a big difference for her. So now the next step, fix your attention on that last paragraph there. Then she structured her business. When she was first approached about structuring her business, you know what her reaction was? Oh, I've done that. I've done that. It's great. I love it. I save $11,000. The thing is, she had not done it. She only put on one layer. Remember yesterday, the skier, the layering yourself for protection in cold weather? She was not structured. She was not layered. She had only one thing. It is the interrelation of business entities working together that truly structures your business. So at first, she rejects it. Oh, I've already done it. Fortunately for her, she listens and she does structure her business. Now, instead of paying $10,000 a year, she gets back $20,000 a year. Not an $11,000 difference, a $30,000 difference. She's made an extra 60% on her money. Assuming that she was making $50,000 a year, we're going to assume 20% taxes. A 60% return by making one change, and she's going to continue to get that benefit year after year. If your bank was paying 60% on its savings account rather than 0.1, you would run to that bank, wouldn't you? That's the position that she was in. That's the kind of impact that business structuring made for her. I'm Scott at nevertoomuchmoney.com. You can reach me at scott at nevertoomuchmoney.com, my email address, if you would like more information on business structuring. Thank you very much.